I want to tell you about the $40 billion rule of thumb that I've been using for farm policy and also sharing with producer groups this winter. Chart is a look at inflation adjusted direct farm payments going all the way back to 1930s. And you can see there's been a few eras in history when we've gotten near or above the $40 billion threshold. $40 billion is where we're going to be as the final tally for 2025 comes to an end. But I think we're going to make another run at it here in 2026 when you include the FBA or the Farmer Bridge Assistance Program, even more ad hoc potential coming out of Congress in 2025 for 25 production or maybe even 2026 production, but also ARC PLC payments for 25 production paid in 2026. So we're likely to see another big year in government spending. So what's the $40 billion rule of thumb? Well, throughout history, when we see farm policy get to $40 billion, it usually comes before a big rehaul or overhaul or revamp of how Congress and DC views foreign policy programs. So let's take a look at the 1980s. We spent a lot of program dollars in during those early years of that farm financial crisis. We were using that payment in kind era. So it was sort of a one-off year by year acreage idling program. By the time we got to the end of that decade, we had the conservation reserve program. So a really big program that idled a whole lot of acreage in a short period of time. If we look at the late 1990s and early 2000s, we had the LDP era. And so eventually we left that era, went to the fixed payments. We also went a lot of emphasis on renewable fuel standard. That was kind of another part of this, using some of this corn that we had a lot of ending stocks for. And now, of course, today we're talking about a little bit of this ARC and PLC, but really the ARC and PLC haven't been working. So we've been using a lot of ad hoc spending. A lot of producers, a lot of groups have been pointing out that we're spending a lot on these farm policies, but we're still having growing ending stocks. We have low commodity prices. So this income support, again, from ARC and PLC to some degree, but really these ad hoc programs have gotten to be really expensive. There's still a lot of ending stock pressure. There's still a lot of commodity price pressure. So could we be looking at a potential for a new era in farm policy in the years ahead? We'll stay tuned.